Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market party continued last week, as nothing appeared to be able to blow the froth off the partygoers' libations. Monday brought, continued stream of bad news about COVID-19, yes, that's the name for the coronavirus, which saw reports and cases and deaths this week explode, with some 60K now reported and just horribly 1,500 dead in China. Still, the markets did soar on Monday, and that was ahead of Powell's testimony to Congress. Even though the market started out weak, the buyers did come in again. Tuesday, the market reversed to the downside, and it was the only day of real selling as the FTC came out and discussed a probe about the acquisitions of the big tech companies. And those big tech companies backed off on that day, but again, they didn't do a whole lot of damage. Tuesday was the day of the beginning of Powell's semi-annual testimony before Congress. And of course, he came out and said everything is fine, everything on course, everything is in control. And he has an eye on the coronavirus and its effects. Of course, it's all in control with a growth rate here in the U.S. at just over 2%, very substandard, 11 years into an expansion with interest rates at 1.5%. So everything is in control, but they're still in crisis mode. But he doesn't say that, of course. 1.5% interest rates. I think we're going to record low interest rates later in the year, and I think Powell is setting it up for that. Wednesday, he set up more because during the Q&A, he said that the Fed would aggressively use QE to fight the next recession. Of course, admitting that all the other bullets are gone, they can jawbone with their forward guidance, but I don't know what good that is. And yes, they can print money and pour it in, and while they think they can get away with it without stimulating a inflationary bulge, well, it's yet to be seen what happens when they finally do destroy the dollar, which right now is very strong because the rest of the world has, the same problems or worse. In the meantime, investors loved it, and they pushed the market on Wednesday to another record close. Thursday, there was an overnight drop, as that's the day that China came out and talked about the change in the way they were testing for COVID-19, and they added a huge amount of cases, and that's when the numbers got up over 60,000. And the S&Ps, they fell very sharp pre-market, minus 30 points. But then for the rest of the day, they moved up and actually moved to the plus side. So they had a giant recovery and then ended the day with a small loss. Friday, the markets were firm early on very good earnings from NVIDIA and Roku. But then investors finally started to give a little ground in here as the market got up to these really high levels. And, the good earnings fueled the ebullience again for some minor period of time. But then the markets kind of stalled and begin to edge down. And now with the S&Ps down about maybe 7 points here at the midday period as we are doing this show. The stock market is certainly at an extreme. That is, of course, a very obvious thing and maybe a statement that's not even necessary, but here we are. But how much is really an extreme? That's a question. What happens following gains that have durations that are this long and are this big? Well, what I want you to do is watch the video that we put out on Thursday, Big Picture Analysis. And what we do is we show 6 examples of secular bull markets since World War II. And it is very compelling. I think it's an important video for you to watch. And there is reason for caution, and really some seriously considering changing risk allocations. And of course, that is away from the stock market. That will be very hard for some of you to do because you don't want to miss out on, well, the next 1,000 points that the Dow goes up, or 100 or 200 points that you might get here in the S&P 500. Heaven forbid you miss that. But there is reason for caution, and I want you to go watch that video. You need to be a level 2, 3, or 4 member here at askSlim to watch it, but you will find it very interesting as I analyze these markets going back to World War II. So 6 of these secular bull markets and what happened in similar situations to what the market is doing right now. A big, long upside move. And it means something. Still, that has not changed our analysis right now that is called for a correction into the summer of a modest 8 to 12%. Yes, I'm going to call that modest, and it is still what we're looking for. Now, we think that if that were to come, the market would survive it and be better after that into year end. But we think that based on the analysis, there is much more trouble coming in coming years, in the near-term years here through 2022. So you really need to watch that video if you are an investor, and of course most of us are, even if it's extremely passive. We're going to call still for a dip this summer, into the summer, of a modest 8 to 12%. Some will think I'm out of my mind. Stocks this week, well, they gained 2 to 3%. The NASDAQ the strongest. I thought at this point the stock market had about 1 to 1.5% upside potential versus 4 or 5 times that downside risk. Well, here we are doing better than that, as the market just wants to move through all resistances, though there is another one coming up I'll show you later in the show. Bonds, they had about an even week, kind of a narrow, choppy range in there. The gold market firming while the dollar is strong, but the silver market also firming. And if you watch our Wednesday show, Future Speak, we talk about the silver market and a trading opportunity. We put out a trade opportunity for our members yesterday or this morning, and that trade opportunity to us really looks like it's good. So take a look at that also in silver. Silver up 4 cents for the week only so far, 4 or 5. However, that could just be the start of something good. Dollar up about 0.4%. And gaining strength, and the upside trend is clear, and the dollar could be heading back over 100 as it's clearly moved into an intermediate rising phase that should take it for some time longer. That overall should not be great for the precious metals. However, there are occasional times when what is normally an inverse correlation does not hold up, and times when the dollar flattens out in here, you could get some upward trends in the precious metals. Still, we think the upside for gold at the moment is limited, and silver is better. So take a look at that. A strong dollar up 0.4% on the week. The oil market regains about $1.60 from very depressed levels. It's in a bottoming process, we believe, and again, we talk about that in the Future Speak show, so you're going to want to watch that analysis. And that is, we think, a limited upside in the light crude market, and I'll show you that also in the short-term view coming up. Follow us on Twitter at askSlim. Do become a YouTube subscriber. We put out things on there that we're not putting out in our regular membership. So I think it's really important that you take a peek at YouTube. We're putting out more and more videos out there, and our analyst RV is really doing a good job starting to do some of those videos, and he's going to be bringing more and more of those to you in the future. So please do become a YouTube subscriber. If you like this video, why would you not? Please do give us a thumbs up on the video. That is the opening of the show, but do not go away. Don't speed through anything. Don't do anything so that you can't watch this next presentation I'm going to give you for just a few minutes of one of the most spectacular tools that you as an investor or a longer-term position trader or a longer-term option trader, there's hardly a tool that is better than what I'm going to show you right now. That's the Slimulator Momentum Tracker for investors and long-term swing traders. I'm going to give you a very good idea of what that looks like in a moment. Right now we're in our preview week. The Slimulator Momentum Tracker Beta, actually there's 2 more weeks of that to go, where you'll be able to get the preview of the great program I'm going to show you in just about 30 seconds. You'll be able to test that new momentum tracker for investors and position traders. You're going to get a special free preview of our SIR, Stock Index Report Daily. You're going to be able to get a free preview of our SIR live stream. So in other words, Stock Index Report live stream, where you see our charts for the S&P 500, the NASDAQ, and the Russell on a 15-minute chart with support, resistance, acceleration zones to catch those big moves, and just unbelievably reliable reversal scout. If you're a day trader, short-term trader, you must have this information. You'll be able to get our weekly outlook on the stock index report that has all of my cycle charts on there, and the preview of the Spider ETF review, which all of these things Matt does fantastic work on. So just become a free member. You don't really need a credit card to see all of that for the next 2 weeks. Go to askSlim.com, become a free member. Now, you get to see the incredible and upgraded again in the last week momentum tracker. Well, that's not it, is it? That's the first chart I'm going to show you. And there is the momentum tracker right there. Now, this is one unbelievable program. And the more I use it, the more I say, wow, is this incredible. So let me just point out to what you have right over here. This is a single symbol search. So you can just put in a single symbol and search for something. I'm just going to put in Exxon, and it's going to bring up the Exxon and have it highlighted, but I happen to be on the S&P 500, so it takes a second in there. The data feed from our data provider, fantastic, is Intrinio, and that's just an unbelievable, powerful data feed that we have in there, and it's able to just bring you an update constantly in here on this, and you can see it updating in there. So you can actually pause that feed to stop that. You can see in here, pause the automatic updates because you may be doing research and not want to get the updates. So what do we have in here? There's so much. First of all, besides being able to put in that single symbol search, and if you only want to see the single symbol, you just click on the little eye right over there. You can see that. You click on it again, and it's going to go back to whatever you have in there as far as a watch list. Here's our watch list selector, and you can see in here my own watch list in there, and then you can see that single symbol search, the S&P 500, NASDAQ 100, all of these Spider select groups, my own focus list of stocks that are in there, the 48 best traded stocks, and all of these unbelievable canned lists in here that you can research in there. And just an amazing amount of information. We have over 1,000 symbols in here right now, and that's going to increase as we go because we know we're missing some symbols. And what else you can do, and I'm just going to pause the feed in here so it doesn't keep doing what we're doing, is you can see in each particular group what the conditions are. So what I have here is this wheel right over here, this pie chart, and that is right now set to directional bias ratio. What that's telling me is that in this group, which is the S&P 500, 54% of them have a positive directional bias based on our algorithms, 29% have a neutral, and only 18% negative. So that's 3-to-1 positive right now as far as the directional bias ratio. You could actually look in here and you could choose long term if you want to see, and you can see the long term, how that changes. You could see the intermediate term, which is really based on weekly analysis, and you can see that right there. Or you could see the short term right there, and it just keeps changing. It instantaneously gives you what's going on in that particular watch list that you're looking at. So I'm just going to click resume feed right over here, and I'm going to go back and I'm going to choose a different list. Let's look in here and see as we look at let's go to XLK, which is the technology stocks right over here. You can see XLK technology. And now I'm going to pause the feed and go into the scan mode right over here. And I'm going to scan for, let's say, short-term bearish. I want to know the most recent stocks on the short term that turned bearish. And I'm going to click scan. And now what it did was go through that whole list, and it gave me the ones that have turned bearish most recently. And you can see in here that you have NetApp, which now is in this very negative mode. So it just turned negative here. And now everything is negative, long-term, intermediate, short-term, and it says directional bias is very bearish. The weak negative conditions suggest failed rallies and lower prices. And you go look at an NTAP chart, and you'll see what we're talking about in here. You want to know the dates and things happen? I just click on NTAP right over here, and you can see in here, here's the metrics. And you can see that the directional bias in here went from slightly bearish to very bearish on just the 14th. There were a lot of changes on the 14th because this stock just weakened, and you can see the last changes right in here. So these are going to be, they'll be all saved in here, so you'll be able to tell when things changed a while ago, and we'll be able to do some looking back on the charts when we have more information. So this is brand new, so we're just saving it. So you can get all that information. You could see that there on Cisco. It just changed to very bearish also on the 14th. And if I go back here, I'll just stop the scan, and I'm going to go back and do a different scan. And I'm going to look for short-term bullish right there in the same group. And now you could see, well, Visa is not only short-term bullish, but that is bullish all the way across the board. That's a stock that's very bullish, and it says only minor declines and higher prices. But when you look at Juniper, that turned short-term bullish. You see the green right over there? But what that did that while all of these other things are bearish. So what it only did was switch it to bearish from very bearish. And it's in a short-term bounce. You can read that. Conditions suggest downside resumption pending. There is just so much in here that is so incredible. You want to just do a single symbol, we'll just go right over here, and you can just pick them out. Let's say you want to look at that NTAP, NTAP, put that in there. It'll show you that. You want to switch over to Apple, and you just highlight that, AAPL, and it'll switch over to Apple, very bullish. Again, we have over 1,000 stocks in here. We're going to go back in here to the my watch list mode, and this is my watch list right over there. And all I did was in here is built this watch list, and you can see it saved in here. It's everything that I wanted to look at. If I want to add something to the watch list, I could just edit symbols right in here, and you can edit symbols that you want to. Or when you're in another watch list, you can just click the actions button, and it will add the symbol to my watch list. Unbelievable. You can learn so much about the different groups in here. You want to buy energy, let's just go to the energy group right over here. What stock do you want to buy? Well, you probably want to buy the ones that are the most positive. So what I'll do is I'll look right over here. I'm just going to ask this to tell me directional bias ratio, and that's what this is set to. It shows you that most of them are negative right over there, but if I want to scan on the ones that are positive, I just click right over here, and you can see KMI, Kinder Morgan, is positive all the way across. You don't want to buy the weak stocks like Valero, which is likely to keep going down. You want to buy the strong stocks like Kinder Morgan that is likely to keep going up. Very bullish right over here. I'm sorry, Valero's got a green long term, so that one is neutral. But you go down here and you'll be seeing a lot of negative stocks. There's EOG right over there, which is red all the way across. Very bearish. Weak negative conditions suggest rallied prices and failed rallies and lower prices. And how long is that for? Well, our investor outlook right over here is plus 3 months, is 3 months or plus. All of this unbelievable information to you right now that you can have plainly for free. And all you have to do is become an askSlim member and a free member if you're not. Everybody that is a free member to all the way to our level 4 is getting free previews on this right now. You do not need to be a paying member. Join us for the beta testing period. Ends February 26th. Go to askSlim.com and sign up for a free account. See the free previews I just told you, and we want your feedback. Right on the bottom of the Slimulator, Momentum Tracker is a place for comments, and please go on there and give us your comments. We want to keep improving this, and you can see we are. No credit card necessary. The icon will just appear in your free dashboard or whatever dashboard you're a member of. You have questions, you want to know more about this, write Matt at askSlim.com. The incredible Slimulator Momentum Tracker with all of our proprietary algorithms built right into it. It is a great tool to help you with your trade planning and everything that you are doing regarding your own trading work and investing work. Great, great tool. All right, so now we're going to get to the best and the worst stocks for the week. We're going to take a look at 5 stocks. I threw a bonus in here, a 6th stock, and then we'll look at the worst of the week. Here is the first stock we're going to look at, which is Vivint Solar. Look at this move. Biggest stock of the week, 21% on no news. It is in extreme overbought condition. Now, what makes it so overbought? It's the percentage away from this 34-week moving average is what I look at when I look at a weekly chart. Now, momentum is clearly strong, and a correction is very likely. But you got to ask, what is going on here? You can see the clear cyclical rhythms in here, and this giant 2 weeks in here where the stock moves from $8 to $11.27. That is one major move, and to me that is overdone and an extreme overbought condition. But what is going on in solar stocks? I got to tell you, I think there's a paradigm change going on in here where investors are catching on to the fact, well, I hate to say this, like Tesla, eventually alternative energies are going to be the thing. And I think investors are really starting to catch on and get into this. This stock, the earnings were just upgraded to lose 26 cents for the year of 2020. And, well, that makes it incredibly expensive. And it may be a while before it has earnings. But if it ever earns 50 cents, it'll look like a cheap stock. So that's what happens when these stocks are getting way ahead of earnings. And this one gets a huge move on no news. Earnings on March 10th. And we'll be just keying in on what those are. But again, paradigm change. CSIQ is the next one I'm going to look at. I threw this in as a bonus. Now, this is a stock that I have just over the years loved and then watched it just melt away sometimes. And every time it started to look bad, I backed off on it and said, well, you got to just wait. You got to wait for the right time. Well, this is trading at an 8 PE. This is a company that really earns money. $3.02 expected this coming year. It's only an 8 forward PE. And this is turning into a monstrously bull pattern. You can see it's getting up close to testing that cycle high. This was a negative cycle as it broke underneath that cycle support. The probability of it equaling this high after this formation is less than 15%. But it did it. You can see that. And there's a message in it. And that is that this period right in here is a buy period. So once I'm sure that's the anchor point, I'm going to put a buy zone in here. And you can see where the buy zone was right in here and how it exploded out of that. Well, a buy time frame is coming. So time and price might be under 22, 22 and a half, sometime in the late March or early April period. But this is a very bullish pattern, and I'm going to call for all-time highs in Canadian solar coming on. So I'm loving this pattern. It reports its earnings on March 19th. Keep an eye on that. New paradigm or changed paradigm for investor sentiment, I think, in these solar stocks. There's some reason they're doing this. They want this group, and you can see that. SunPower's been a disappointment, but that one I expect to come to life also at some point in here. Next stock we're going to look at, Roku. And this stock gets a huge move up today and then fails. Look at this. It has this big upside tail right over here and comes all the way back down. We had two scenarios in here. There's a very bullish scenario right there, and this scenario number 2 where it kind of hangs around in this triangular shape and then eventually breaks to the downside over here. It looked more like scenario number 1 this morning, but now door number 2 clearly looks like the one to pick, that it will not do better than that area between 151, 155, and then turn down again. This was a major disappointment in this chart. It was up 14% on the week. Now it's barely up a few percent in here. When I first did all of these studies, it was way up 14% on the week. We went positive early in the week on this, and we made a great call. Lots of traders were in on it. And now I hope some of them banked a lot of the profits. Their earnings were a loss of 13 cents versus an expected loss of 14 cents. Sales beat, and the streaming hours were a record, but it was at crazy valuations, with this stock losing 14 cents and trading at 150. I mean, you gotta say, wow. I mean, this is an example of, well, maybe 2000. Year 2000 with the dot-com situation. Just crazy valuations in here. It's maybe going to take out this low over here and put in a much worse situation. Scenario number 3 will be quite negative if that were to happen. So this is a big failure that you see right in here today, and that has to have the bulls being disappointed, and beware when you look at that. The next stock we're going to look at is one that I don't look at a lot, and this is Alteryx. It's in data analytics, and I wanted you to see the magnificence of what we call cyclical harmonic families. Now, if you don't understand the word or that phrase, then please do watch our cycle workshop, and you will understand about cycles. Now you can see in here 1, 2, 3, and in the 4th of the harmonic families. This is like music. Here is your dominant, here is your minor thirds right in here, and you can see how they shaped beautifully with each of these minor thirds very clear in each of those bigger cycles. Where is it right now? Well, in the nested period, or off of the first nested period and blasting to the upside. You could see the same thing here. You can see the same thing right over here and right over here. All of those brought big rallies. Now this moves up to the fib extensions right now, past that last high over there. So this is super strong. Earnings beat, analysts all over the place upgrading it. And we're going to put in a target in here of 174. At that 161.8 fib extension sometime in the springtime. We figure it will get up there, though it could certainly do it sooner, as earnings beat really strong earnings report. And the last stock in this category we're going to look at, of the best of the week, is Expedia. Now, this is pretty amazing with the coronavirus out there, gain of 10% on the week. This stock, now you've got to be cautious on as it gets up to the resistance zone after a big breakdown. So earnings beat in this one, and they decided to skip giving guidance because of the coronavirus. In other words, they just don't know. And this big performance was based on successful cost cutting, of which they say they're going to do more. I say it fails at this 125 area and then pulls back to the support area down over here, which is at around 112. And then we'll see if it gives you this bullish formation in here. The odds will be pretty good it will get back up into these areas over here. Of course, the way the coronavirus is spreading and the way the news is getting worse, you got to think that these travel stocks, they're going to have a hard time looking past that. Nobody wants to get on a cruise ship right now. And I just got a call from NCL yesterday reminding me of a coupon that I had bought on a cruise some years ago that had expired last year. and wanted to know if I still wanted to use it. So they're in pretty tough situations, the cruise lines, and the rest of this group, well, they're probably still going to suffer a little bit, but I want to note some of the airline patterns, they're getting better. That is a look at the best stocks of the week. And now we're going to jump over and look at the worst. The first worst is Bed Bath & Beyond. We'll switch out of Expedia and go to BBBY. And that is a stock that just absolutely got crushed. Now, I want you to note the colored phasing in here. The way that we put this colored phasing, or the reason that we do, is just to give a different visual for our members so that they can see when something is in a rising phase, when it's in a corrective phase, and when it gets into a negative phase. So when it gets into a negative phase is when it breaks below a significant low, a cycle low right over here. And you begin to get negative configurations, as you could see right in here. Negative configuration. In other words, they close lower than they started. And here you can see the formation probably of a positive configuration. However, it's coming down past the 618 towards the 78.6 with still some time to go. So 26% loss on the week after the CEO warns. Analysts all over the place downgrading this one. And a law firm announced that there is an investigation, a possible violation of federal securities law. So that really broke the stock in here. And we'll give it another few weeks on the downside. And then a bounce that's somewhat minor, and then moving down again. And we could see the stock back under the sevens before this is over with. So earnings getting cut in here. Somewhat of a low PE, but beware the value trap on certain stocks like this. And we're going to look for this stock to have more to the downside than a minor bounce. Next stock we're going to look at is also in the retail, but this time retail apparel category. And that is Under Armour. And you can see in here a similar situation as this stock moves sharply to the downside, 17%, and it had a shocking loss for the quarter, really surprised people. Analysts also downgrading this one like crazy. And we could see it moving down for another month at least in here and getting sub $15 in this stock, as it really looks to us like that's where the supports are. This one is at around 1477 right there. This one right over here around 1570. So we think that it's going to get into that zone. A lot of downside risk still in here. And you can see that important sell zone where the resistance was really formidable, and the stock breaks huge from that 22 area all the way down now to $17. So very, very bad looking pattern in here, and more downside likely to come. Marathon is the next one we're going to look at. Energies have just been under huge pressure, as I showed you on the Slimulator momentum tracker. Just a lot of downside. Here you have a stock that has now moved into that red zone again. Now I'm showing you these two harmonic families, the minor halves and the dominant cycles. And we're about to get to this bottoming period of the first half right over here. And you could see what happened here. It held above that low, so it never turned red. It gave you a minor 3-week rally and then did break down and continued down that whole cycle. So we're expecting it's going to have a bounce in here of some few weeks once it makes its bottom, which we don't see there yet. 6% loss on the week. Earnings missed to a loss, so a worse loss. And we see 2 to 4 weeks on the downside still in a horrible pattern, a terrible, probably low velocity bounce in here, and then moving down again. Marathon, a terrible pattern. The next one we see here to look at is NTAP, NetApp. And you can see in here, I referred to this one. Also, the conditions in this one are not great, but there's a bottom likely forming in here. Earnings missed, analysts lowering their target, and we see it as a negative, but in a bouncing area. So we're going to look for this to begin to repair itself and to give itself a bounce. Now, the reason we say that is because there is a rising trend beginning in here. You can see this low right over here and this uptrend that is fairly clear when you look at it. So maybe it comes down, takes the low out by a little bit, gets down into the lower buy zone, and then has a bounce in here. But it's going to have to do some work. And this is for traders only, really. I don't see this as in a stock that is that investable because things are not showing up as positive on our momentum tracker right now. So I use everything when I do my analysis, and my analysis says momentum has got problems in here. And even though it's in a lower buy zone area, it's got work to do in there. So 4% loss on the week, bad earnings, and we're going to say watch for a bottom and a potential bounce into the 60-65 area in coming months. We'll see where it gets stabilized in here. And the last one we're going to look at is United Technologies, UTX, as we used to call it, UTEX, on the trading floor. So this is, I bring this to you because some patterns are just incredibly interesting, and I wanted you to see how interesting this was. I'm just going to blow out a little further so you see these cycles. Now, what I want you to really look at, there's a couple things, right? First of all, you can see the tops of cycles and how they were made. Most of them were made with very clear candlestick patterns, an engulfing, a harami, an evening star, and a dark cloud cover. All of those, when you start to get those around cycle peak areas, you have to be cautious in what we see in here. So what we see in here is these dominant cycle patterns right there, and what happens when you get into the nested areas. In other words, the small cycle coming down, the big cycle coming down, well, you get a decline. That's where the corrective periods are. You can see this one here exactly, really lines up nicely. Look at the way this one lines up right over here, that big yellow corrective zone, and right over here also. And now you get the dark cloud cover, and yes, entering into that corrective period. So 3% down on the week. No real news that we see in there, but this to us is a warning. So I think a top is in place when I see this, and here's our targets down over here. We'll call it 145, and the date of this low right over here is at the end of April. So to us, UTEX is a shorting candidate as it enters into this corrective period, and what you can see is 1, 2, 3, 4, and now the 5th perfectly aligned corrective periods that brought significant declines. You want to be able to look at things and say, how do I have the highest probability for trade entries? Well, I think that's what you have right over here. Clear cyclical action, candlestick action, and as soon as we get the momentum turning down in here, which it is not yet on the intermediate pattern, that will then be a signal that this has really entered a corrective period. Do I have to show that to you? Here's where momentum turned down right here. Here's where it turned down here. Here's where it turned down here. Here's where it turned down here, and it has yet to turn down. That is coming, and that will set up a very, very nice trade. That is it for the best and the worst stocks of the week. Now, as we always do, we bring you our short-term view for the coming week. Again, if you like this video and you're on YouTube, give us a thumbs up. Now let's take a look at the short-term view for the coming week. We're going to switch over from this chart in UTEX, and we're going to go to light crude. That's how we're going to start out, and we're going to go to a 10-year daily chart and zoom in right here. So our short-term analysis is done on daily charts. We still do cycle analysis in here, and you can see the rhythms in here are quite clear. You had that big break in here. Momentum went negative right at this point and remains negative through here. So what we said in light crude last week is that we thought it would have a bounce, but the bounce would be kind of weak and it would fail. It might try to get up to 53.40. In this case, it wasn't able to get up to that level. It turns out that we lowered the target right over here. This is now right around 52.90, 53. and we think it's going to have kind of a struggle in that area. We're going to look for it possibly to test 53, but then come down and threaten these lows over here. So for light crude, we mostly got this correct. It was maybe a little bit weaker than we expected. And when I review what I did in how we did in all of our analysis based on the coming 1 to 3 weeks, we're going to get about a 65% in here. As we were good in the bond market and the light crude market, we get only a little bit of credit for the stronger dollar, which we thought would rally, but then turned down. It rallied and kept going. And the stock market we get, well, partial credit for. We thought it would go up, but it went through our levels that we were looking for, and then started to pull back. It got about 15 points higher than we thought it would in the S&P 500. So we're going to get a 60 to 65% for the week. Take a look in here, light crude. We're going to just say 53 problem, and then pulling back down again. So that's a look at the light crude market. Next thing we're going to look at is the gold market, /GC. In this case, we thought the market would rally, and that it would pull down and break down from underneath this rising flag. It's really still in the flag, as you could see right there. It is gaining today and accelerating a little bit up about $8. The reason that we think that it's going to have one more trip down in here, here's your cycle alignment down here about a week from now. We'll call it 4 to 7 trading sessions. This low is just out of place. It's very early after this break right over here in that double top. So the highest probability is it will have one more drop in here, get close to somewhere around 1560, 1550, and then be able to move up. Now silver is firming, silver is stronger, and gaining 13 cents right now. So it's a nice size gain for the silver market, which we've been more favorable on. And that's helping the gold market in here. And this is happening despite the fact that the dollar is firm again today. So gold really strong when you look at that. We'll just call for one more dip and then move back to the upside. Note that the momentum turned positive here. It is still in positive momentum. That anytime it gets oversold over here and you get the buy signal, it goes back up. It did the same thing right over here, and it's been rising there. So a strong condition here in the gold market. We're still going to look for a minor pullback before it then moves up again into that 1600 to 1615 area in there. So we're calling right now a range 1615, 1550, and really that might be the case over the next month as we look out. So a dip, a rally, stall in this area, come down again, and overall we don't see a lot of upside ground. If it proves us wrong, you will know that because you will get a close over that 1600 or maybe even over the 1613 area, and then just the dominant pattern will have taken over already on the upside. I think that is a low probability. We're going to call for this range coming up here. It's especially the case when I look at the dollar, which even though it's strong, it has not really gotten in the way. Look at that upside move. Again, we're focused on momentum. Strong here and still upward momentum, very strong. Again, if you focus in on the projection oscillator, this was your signal right over here that it was in very strong shape as it got oversold and then turned up, and you can see it never lost the upward momentum. Here's your buy zone right over here. We think that it'll dip in here under the 98.75 area and then be moving up again. So this pattern right over here, which to us is a very high probability that it could take it over the $1 area right over there, which is way up on the top of that upward channel. So it could get up and touch that up there. And so while we're in this period where you could get a dip, well, maybe gold can get some pop, but then you move up over here and it comes down. And this again looks like a choppy area for the dollar. It looks like that way for the metals. And again, I like silver the best as far as that goes. So the dollar, some of the evidence really is that the euro rebound is likely, and the euro is 0.57%. In here. So we'll just say that the sum of the evidence is that there's likely to be a bounce in the rebound in the euro, and that this will bring some pullback here over these weeks in the dollar. We'll call for a decline and then a bounce over the next few weeks, and not making a lot of ground in here anymore for the dollar. So all of that says that the euro bounce may be more shallow, the dollar pullback may be shallow, and the range may be shallow at this point in here as far as the dollar goes. So we'll call for it to kind of roll over in this week for the dollar, and then after that, the next week, probably another move to the upside in there. Some of the evidence, as I said, just really looking like a choppy market in there. Did I say that some of the evidence in the gold market really looks like a range, 1650 down to 1615 down to 1550 over the next month. All right, so now let's take a look at the bond market /ZB. And you will see right over here, that is a very interesting pattern. Look at this in here. So we were looking for a decline in here to end this cycle right over here. It was shallower than we expected. And look at here, the momentum turns positive here, and the momentum is still positive. And now you have this corrective period only forming this triangular shape. What does that mean? It means that the dominant upward force is still there. That powerful upward force will not allow a correction. And now it's turning up right over here. Boy, you got to wonder about this upside breakout, and that's what I'm calling for in here. So we're going to look for this upside breakout out of this pennant. We'll call it a bull pennant or bull flag. I think that's positive. I think that the sign of the breakout will be over 163.08. That's that peak right over there, though it'll look like it earlier. I still like it to get over that level. And then we're going to have an upside, very near-term target in there. Getting up to this next resistance level right over there, which is in the 164.5 area for the bond market. So we're looking for higher price, lower yields. That's what the sum of the evidence brings us. And that should very well get you a good upside spike. 164.18 really is what we're looking for in here, worst case. And I got to wonder what's going to bring that, and is that going to be something that negatively affects the stock market? So bullish pattern as we look at that in the bond market. That's the 30-year bonds. Now let's take a look at the S&P 500. We were calling for the S&P 500 to have a choppy week, getting up early in the week and then stalling and moving down. So overall, that's pretty much the pattern. Problem is that it was stronger and got through that resistance we were looking at, and it's really not stalling in any significant way. And it was, if it was a choppy week, it was barely. We talked about the upward momentum resuming, and that was a positive occurrence, and that's what we're going to see here as we switch over to the S&P 500. So there was a brief time right over here, literally for 3 days, where this went neutral. I called this and thought it would be coming down for a little bit period more, but you can see in here, that's not what happened, and it resumed to the upside, and we respected that, and that's a key. I thought these resistances right over here, 33.52 to 33.63, would be what stopped it. It got 20 points higher in there, so about 0.5%, 0.75% above where I thought it was going to stop. This next resistance right up there is 34.02, and you can see we're projecting that over there. Now, when I look at some potential minor cycle dip in here, you could get a little dip and another rally right in this period right over here. If that happened, we would expect it to get support in here at around this 33.46 area right there, and then move up again to this area potentially of 34.03, 34.02, depending on how you point that arrow on the upside, and that's the top of that fib extension. And then we think it comes down. So the next 2-3 weeks we're looking in here is that just some chop period right in here and then coming down. We have seriously upgraded this dip in here for this time, and that is that instead of what we thought would be a test of this level here down around 32.15 area, it's now most likely it's a test of this level right over here, right around 3,300. So we're going to look for a chop, we're going to look for a failure below that 3403 area, and then moving to the downside right in here. This market's not going to give ground easy, and with this big upward momentum, it's really a market that is exhibiting just immense strength. Some of the evidence, there's still at least, we think, a few weeks right in here of being able to hold up, and overall continued strength and upward momentum. That minor dip maybe into 5 days from into the end of February, and that would be a buy right in that area if that did happen, and then move up again. Lowest level at this point we see is about 3,300, and then moving up again, probably back to the 3,400 level out around over here before we enter into that next significant period of risk. So the next more than a month really looks like a range-bound chop to us in about a 100-point range. That is it. Boy, did I show you a lot. Boy or girl, did I show you a lot. And I hope it was fantastic information for you. Please do, if you're not a member of askSlim, become a free member, and you'll be able to preview the momentum tracker. You'll be able to preview the level 2 product of the stock index report and stock index report live stream, and just incredible things for you to use for your own trading planning. There's nobody else. There is nothing else like what our team brings to you. 500 videos in that level 2, 3, and 4 category. You want to learn about any of those 8 categories of things that we bring. You can just see what's in there. Who else has a 500 video library? Just incredible. Please do become an askSlim member and take advantage of this. If you've never been a member and you want to get a special trial to any of those, write at matt@askSlim.com, and he's going to send you the trial link. He'll even give you a walkthrough if you are looking to understand what we have in here. Matt@askSlim.com. What a team we have. What unbelievable products. And that Slimulator momentum tracker stands out all on its own. There is just nothing else like that out there. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.